All right, ladies and gentlemen, I hope you had a wonderful weekend. It was absolutely insane in the markets last week. We had everything from war and Jerome Powell to Netflix earnings and a chip correction. But now this week, we have some of the biggest earnings. Over 30 companies worth over $100 billion will be reporting. And then we will have data that will be coming out that will either determine if we get a bounce in the market or we continue going down and continue the 6 days of red in a row and giving up 2 months of gains. So, Chad, we have a lot to talk about. There is definitely going to be a lot to react to, and if you're not familiar with those earnings, it's going to be Google, Meta, Amazon, I think Amazon, but at least no, Google and Microsoft, but then a bunch of other ones that you have I'm sure you have well heard of, but it's going to be exciting. The market is going through a lot with everything going on in this move, so it should be very exciting, and we should be on the lookout for either more carnage or a little bit more relief. So, Chad, I have the plays, I have the keys, all that good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning. Run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, off the bat, before we get into the keys, I think I need to give you a checkup. I've been pointing a lot here to the S&P 500, but don't forget what happened last week from war to Jerome Powell. The good news about this weekend, you did not really get any war escalation headlines, but one big thing you got to remember that happened on Friday, it was absolute carnage for the chips. We were looking at the chip index, and if you guys see what happened here, you have given up a lot of gains. A lot of chip companies, even if they are some of the biggest in the world, I just had SMCI up there, they are dropping below their last earnings level. And what happened? It was a mix of downgrades. You had TSM earnings. It didn't get people excited. You had ASML last week as well. It did not get people excited. And then on Friday, SMCI announced their earnings date, but they did not give out guidance. And that's why the stock dropped about 20%, 23%, because the last time, or I guess beginning of the year, that they dropped their earnings date and they came out with good guidance, it was ahead of their earnings, and the stock went up, hundreds of dollars, if not doubled up. I'm sure you remember in the beginning of the year, but all that took place on Friday, and people were talking about everything from SMCI to NVIDIA. You've given up a lot, and technically from the highs, it is a correction. So this is going to be a big deal, especially as we factor it into earnings, but I had to start with that because that was a big theme of the week last weekend. You also had Netflix earnings. It was good, but again, a little bit about the future got people worried, and now coming into this week, all of these data sets, it's going to give us a lot of opportunities to react. Oh, that's the horn. I hope you're excited, but getting into the keys, like I'm saying, last week was absolutely ballistic, but hopefully you picked up on the themes, whether it had to do with chips, war, Jerome Powell. Remember, he brought up some of those hawkish comments, but also the earnings that have came out here. I just showed you Netflix. There was a couple of other companies, ASML, TSM. Even though the earnings were good, they were not good enough. The bank stocks, they sold off and came back up, but they're still trading lower than where they were at pre-earnings. The fact of the matter is, a lot of movements have happened ahead of earnings, and a lot of stocks have went up a lot. So even though these companies are beating on this quarter, the guidance is just not cutting it, and still we have to deal with war, the global tensions, and then what is going on here with rates. So watch out for that this week. We're going to see how this all plays out, but definitely earnings in some of the big companies, they are going to dominate the calendar for this week. So watch out for that. That is key number one. But key number 2, like I'm telling you, the earnings are going to give us a lot to react to, and we need to see if it's going to swing the pendulum of fear, if it's actually going to give us something positive to react to. There hasn't really been a broader sweeping good reaction to any of these earnings so far, so we're going to see how that plays out. But now, if it's not going to be earnings that moves us, what you got to watch out for this week, it is going to be the economic data, but the bonds, and this is why I have the title of we could bounce this week. I think it does rest in the hands of the bonds. We're going to get a bunch of companies like Microsoft and Google, Visa. I actually even have the list right here. I guess we could start with it. You'll see even tomorrow morning you're going to wake up to Verizon and some banks. After hours, you're going to hear from the materials. You'll hear transports from UPS, then General Electric, Pepsi, GM, Spotify, RTX, LMT, Tesla, Enphase, Texas Instruments, IBM, Facebook, Meta, Ford, Chipotle, ServiceNow, Lam Research, Align, Microsoft, Alphabet, Intel, Snap, Roku, WDC, Dexcom, T-Mobile, ExxonMobil, Abivai. These are a ton of different companies. So like I'm saying, this is going to be one element of the week, but also now the bonds, the data you're going to be getting, the main sets of data, it will be the GDP data and then PCE on Friday. There will also be PMI data that can affect the bonds here, and that's what I'd be watching for, depending on how the earnings plays, depending on how the data, it might really signal this week if we're going to make one of those moves to 5%. Pretty much, if this week does not do good and we have more pressure, I wouldn't be surprised if we start ending around 4.8, 4.85 on the 10-year, and that means we're really starting off the first couple of weeks of earnings bad, and that point, I do think the market would continue to react, and then we'd get more pressure, but that's why I'm saying this week, if the bonds and the data is bad, we will have a problem, but if the data is good and the earnings are good, I was saying it there, it's been a lot of pain if you really think about it. The moment these bonds do pull back, just like any of the other times, whether it is August through October, the bond pullbacks really do help the market get some relief. So we actually haven't had a pullback on the bond yields in a while. So the data this week's leading into the other sets of earnings is good and we get some of a breather. Once the bonds relax, I do think the market will also relax too. Otherwise, keep your eyes out for the delay that we talked about last week. And now coming into the last key, man, I already talked about it here a little bit. The chips are in a correction, so unless the earnings are going to save them, I would keep an eye out for this being one of the main themes of the quarter here, because so far you've already had a massive move on the chips and not all of them have reported. If they all kind of take up this theme, this will be it, April 2024, it will be the first quarter since the chips and AI started to go crazy that they finally really calmed down here. So this is something people have been talking about. The only weird part about it is that the moves have been gigantic. The analysts have already made actions and the companies haven't reported yet. So we'll see if their earnings put the nail in the coffin or not, but definitely keep your eyes out on these names and watch out for this to be a main theme when all of the dust settles by the end of this earnings leading into summer. But Chad, it should be an exciting week. Our work will be cut out for us. Earnings and a little bit of data, and the bonds are already at a level and the market has already moved a lot, giving up half of the year. But now, let us get into the plays. So, right off the bat, I got a couple of different plays. I didn't make that many plays on Friday, even though there has been a lot of action here. I'm still holding some bonds and gold plays that I'm going to be watching. Otherwise, going to be preparing for some of the earnings. We saved up a little by not playing too many to start off, and it's not like there's been any big earnings, but post-earnings really has been the answer. But now it is early in earnings season. Let's see if any of that changes. But now to start off with play number one, I don't know if I'm going to play this pre-earnings or not, but IBM, this one has already caught my attention. They were a big winner last quarter, if you remember. This was an earnings play a lot of y'all did the 2 standard deviations on and hit it, but keep watch whether or not they do good or bad, because they've kind of held up comparatively. A lot of these earnings and companies, they've really given up their last earnings. Like I'm saying here, IBM, they had a great pre-earnings off of some of the hype last time, but then they were at 174, gapped up to like 180, even went close to 200. Remember, options went nuts there, but they're like at the low end of that. They haven't given that up, but like you go to a company like NVIDIA, I mean, they've actually came back down there too. So, or wait, no, which one was it? AMD. They're the ones, like, they're all the way back to the beginning of the year. So, point is, they're holding up a little bit better there. I thought they would be one of the interesting ones, but if they too do bad, they could easily give up all of those gains. But watch out for that. Definitely going to be an intriguing one. And the second play, I'm putting this broadly. I'm using the ETF, but XLF, the banks. If you did not see JP Morgan, Bank of America, Morgan Stanley, the options didn't go too crazy, but banks were dominant last week. The interesting part is that they are trading off of their highs. JP Morgan, I guess I didn't really realize how much they gapped down because they were outperforming last week while everything wasn't doing good, but they're still trading off of those highs. But all of the banks, I'd watch out for it, and at the very least, it's a good sign. A lot of what we saw on Friday and even last week, there was a lot of sell-offs. I mean, if you go look at the chart, there really was like consistent big days of red, and it finally, everybody started to feel it. But I was telling people, even towards like Friday and Thursday, you got a glimpse of it when we had that Iran attack. You saw fear. When there's fear, people buy safe havens. They buy the Swiss franc. They even buy the Japanese yen, but they buy the bonds. They buy gold. You even saw oil go up, but certain days, even on Friday, like we saw tech stocks sell off. It was the chips correcting. AMD, SMCI got murdered. Bonds weren't getting a bid. You haven't really been seeing, this fear, and that's why I'm bringing that up in relation to banks here, because this was one of those things. Even on Friday, they were actually holding up, so it's kind of a good sign. Lets you know something benefiting off of some of the recent moves. So watch out if they keep outperforming. I think it's going to be hard to ignore, because every time if the market continues red, I wouldn't be surprised to see JP Morgan on the high. That was all what we saw last week, but that is play number 2. And then finally, play number 3, Meta. I think this is actually going to be one of the most important this quarter. They have the most to gain and the most to lose. They have a nice gain, and they've moved up. They're already, near like 5-something. Again, even Netflix, remember, they're trading up. Maybe they can trade like Netflix. They beat, but then a little bit softer and then trade down, but still elevated, because even Meta has overshot a lot since doing good on their last earnings. But they have the ad segment, a little bit about the economy and advertisers. Then they got all that AI stuff. I think this is going to be a very big one to watch. So don't have plays on this one yet, but we will run the previews and go over those and hopefully see what we can find throughout the week. But other than that, I don't have any other plays. Still in the Nordstroms from last week. Like I said, riding out the gold short, going to try to get out of that, but I do still think gold is going to be one of the main things that will be moving here. The only other play, I didn't write in the keys, but Kohl's, we talked about this one on Friday. They caught my eye. A lot of these buyout plays, I'm going to be watching that. Maybe even Ulta, they caught another downgrade. Their earnings are going to be a lot later, but maybe they start to pick up some of the trends with the market, but they're getting back down to those October, November levels, so kind of interesting. Other than that, going to watch the data, watch the earnings. I think earnings is going to produce a lot of opportunities for play, so we'll get into all of it. And Chad, I hope you're ready, and get ready because it's almost summertime, but that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining, and I need you to remember, discipline is the door to freedom. Discipline will open it up. The more you control things, the more it becomes free. Chatadonia, keep your mindset locked and loaded. We have big weeks coming up. Drink water, stay hydrated, healthy, get some good sleep. But now, I hope you're rested and ready to go for it again, Chad. But I'll see you in the AM and earn.